Yeah, so Neil, a new reality that inflation is higher and may stay elevated for some time. So today's wholesale prices, or the inflation that producers pay, still much higher than a year ago. Sure, coming down from the previous month, but couple that with yesterday's consumer price jump, and we're still close to those 40-year highs. And that's more than 4 times, by the way, the level that the Federal Reserve thinks is healthy for the U.S. economy. And that's why we have a growing number on Wall Street now, close to a third, predicting a full 1 percentage point rate hike next week from the central bank. And that would be the biggest single increase in interest rates since 1984, when Paul Volcker was Fed chair. Now, before yesterday's inflation report, that probability was at 0. Meantime, you have the world's richest man, Elon Musk, weighing in. He actually thinks the Federal Reserve should cut interest rates instead, and concerned that prices are going negative or in deflation instead of inflation because of the drop in lumber, copper, oil, and other commodities. Now, no one on Wall Street is predicting a cut in rates until maybe next year. Stock markets didn't really recover much from yesterday's worst sell-off in 2 years. You also have more job cuts that were announced today by big technology companies. And that's why some are calling this the start to a white-collar jobs recession. Twilio, the cloud communications company, joining Snap, Goldman Sachs, Netflix, and even Warner Brothers Discovery in laying off workers. And despite the reset that we did see in stock markets, Neil, there isn't really much panic just yet. You know, average investors like me and you are actually buying. They bought $2 billion worth in discounted stocks yesterday, and that is the second biggest day in average Joe's buying in so far this year in 2022.
Susan, thank you very much for that. And then this other development.